Finally, CBK has reopened 2 infrastructure bonds. We have IFB1 2022-14 and IFB1 2023-17, a paper and infrastructure bond rather, which was first auctioned in 2023. In today's episode, we are going to be reviewing these infrastructure bonds. Are they worth it? Was it worth the wait? My name is Berlin. Please press the subscribe button and welcome back to Wealthwise, your home of financial freedom. Now, let's get started. The IFB1 2022-14 carries with it an coupon rate of 13.938%, while the longer paper, the IFB1 2023-17, carries a coupon rate of 14.3990%. The 2022 paper has 11.8 years to maturity, while the 2023 paper has 15.1 years to maturity. So that means that when you give CBK your money, CBK will be paying you coupon for the next 11 years, for the next 15 years. But that is not cast on stone. Why? Because of the redemption structure. I have told you before that IFBs have redemption structure. A redemption structure is a repayment plan that CBK has, that CBK uses rather, to pay you back your principal investment. For instance, if you invest 1 million shillings in the IFB1 2022-14, the first redemption is in November 2030 and you'll be paid back 50%. Okay? So if you invest 1 million shillings in the IFB1 2022-14, come November 2030, CBK will repay you back your 1 million shillings. However, if you invest 5 million in this paper, CBK will pay you 2.5 million in November 2030, right? That's 50%. It has a redemption structure of 50% of the invested amount. And the balance 50% is paid on the maturity date, which is the year 2036. So if you give CBK 1 million now, CBK will pay you back 50%, will pay you the entire 1 million on the redemption date. And if your investment is in excess of 1 million, then you'll only receive 50% in the year 2030, and the balance of that will be paid out to you at the maturity of the paper. Okay? So that is how the redemption structure works. You earn coupon on your cumulative investment for that specific paper. Even if you had invested maybe 900,000 in the previous auction, and now you invest an additional 200,000, that will make 1.1 million. So you'll have surpassed the 1 million threshold. So come 2030, CBK will pay you 50% of that. 50% of 1.1 is 5.5. Sorry, it's 5.5. So you'll receive 550,000 shillings in November 2030, and then the balance of that is now what you'll continue to earn coupons on until the maturity. Okay, so that is ideally how the redemption structure works. Another important date that you guys need to know is the bid closure date. This auction is open up to 12th February, right? And then settlement will be made on 17th February. So even as you put in your bid, you at the back of your mind you need to know that at least preferably by the bid closure date, but by 16th February, by 12th February rather, you need to be having the amount to remit to CBK ready in your account in cleared funds. Good? Awesome. Now, these two papers, they pay coupon. The 2022 paper pays coupon in May and November. I don't know if you remember me mentioning that there seem to be so many bonds which are paying coupons in May and November, and it's an interesting observation. I'm yet to figure out why, yeah? And the other paper pays coupon in March and September. So this is also another good opportunity for you to ladder your investment if you are looking towards earning passive income from investment in treasury bonds, yeah, consistent cash flow. However, at a personal level, whenever I am presented with an opportunity to earn more, I will always go for the lucrative opportunity for as long as it's within the same risk level. Okay, so the 2023 paper carries a coupon rate of 14.39%, and because it is an IFB, it is not taxed. The 2022 paper carries a coupon rate of 13.93%, and because it is an IFB, it is not taxed. There's a time I did a video and I was telling you guys the mistakes that we investors make while investing in while taking up investment in treasury bonds. I get asked, when is the next IFB being issued? When is the IFB being issued? With the mindset that because it is not taxed, it has a better opportunity. It earns you better returns, yeah? And some of us might have possibly left the treasury bonds, the 10% tax treasury bonds, which were offering coupons of 16%, with the mindset that we are waiting for an IFB. Now we have this IFB. This 14.39% is an equivalent of 15.99%. Remember, mliacha a 16-point paper, which possibly had better returns, okay, waiting for an IFB. And then when the IFB is floated, now it's floated at 13.9% and a 14.39%. So like I told you guys before, it does not always mean that because the IFB is tax-free and the treasury bond is taxed, the IFB is more lucrative than the treasury bond. Now, if we had a treasury bond which was auctioned at 16.5% with a 10% tax, that paper had a better return than the IFB. Anyway, this is now a good opportunity for us to now understand and learn that an IFB does not always mean that it is it's the most lucrative one. Okay, remember I told you that the coupons on the 2023 paper is being paid in March and September, and the settlement date is on 17th February. So that means that if you remit to CBK your money on 17th February, come 10th March, you will receive your coupon amount, the full coupon amount, okay? So that ideally tells us that these auctions carries with them accrued interest. The accrued interest on the 2023 paper is 6.3688. So when you put a bid of 100 shillings, prepare to remit to CBK accrued interest of 6.3688. However, the exact amount that you'll be remitting to CBK will be communicated to us on the bid closure date. We, however, predict or expect or anticipate, not with certainty, we however expect that there's a possibility that it could be sold at a premium. Interest rates are volatile right now. They are on there's a push and pull on the interest rates between CBK and the investors, yeah? As a matter of fact, the previous auction, we were expecting a premium, but it was sold at a discount. If you have seen the latest reports, there is a deficit, a budgetary deficit, and so for the government to raise money, there's a possibility. I am not saying rates are going to increase at this particular instance. I'm not able to predict that. But there's a possibility that rates might be going up again. Not unless the government manages to cover that budgetary shortfall. Okay? So if the investors, the competitive investors had actually seen this, and they decide to put to demand for higher rates, then there is a chance that this paper could also be sold at a discount. And this particular instance, honestly, I cannot speak with certainty on this auction. It's a comme ci comme ça situation for me, right? So the best thing to do is expect a premium auction, and so as you put up your bid, have an extra amount. Have an extra for the interest accrued and have slightly more for a possible premium auction. If it is auctioned at a discount, then you are safe. But have slightly more. I don't want what happened in December to happen to you, where people placed bids and only had the accrued interest in place, and then CBK asks you to send to it slightly more and you don't have the extra. And so you find yourself in a situation where you forfeit that investment opportunity because you didn't have the extra amount. Is it a paper worth taking? If you don't mind earning 13.9% for the next 11 years, take it up. But remember also, you can always sell these papers in the secondary market, or you can always go back to CBK for rediscounting. So is it a good paper for us to take? Yes, it meets my individual objectives. That is my desire to earn passive income. It meets my individual objective of both laundering. The rate, it meets my individual objectives of the minimum return on investment I will be earning on a fixed income or a long-term investment opportunity. So if you have such investment objectives, I mean, run it through your investment objectives. If it meets your individual objectives, then you can take it up. Once again, thank you for being in WealthWise, your home of financial freedom. See you on the next video.